And now for more discussions on recent monetary policy announcements made by China's central bank, I want to bring in Hong Hao, chief economist of Grow Investment Group. Thank you for joining us, Mr. Hong. So how do you assess the potential for further rate cuts in the future, given that China's LPR remained unchanged this month, but the PBOC governor's commitment to maintain a supportive stance on monetary easing during the two sessions?
Yeah. Thanks for having me. I think inflation, especially the CPI level in China, is still quite low. So the room for further stimulating the economy using monetary easing is still right there. And also in the first 2 months of the year, I think loan growth is healthy, but it is not that strong. It's because the seasonality, right? So during the Chinese Spring Festival, I think most families choose to go out instead of go to buy a house. So I think as we move into March, traditionally it's a high season for loan demand. Then we should see loan demand pick up from there. So at this juncture, because we have lower LPR last year, and also because the market interest rate is still relatively low, so it remains to be seen. I think the PBOC is on hold, just to see the former monetary easing's effect on the Chinese economy, and then to plot the next move. So I wouldn't be surprised to see that going into the second half of the year, the LPR and other interest rate level would be a step lower from here.
And in light of recent changes in other central banks, what impact could Japan's rate hike and the Fed's March meeting have on China's rate decision?
Yeah, I think especially today, we're probably going to see the FOMC rate decision. I think at this juncture, it's more likely than not the FOMC is going to hold its interest rate steady, and probably with a view to cut its interest rate in the second half of the year. And once it does that, it will open up the room for further monetary easing for the PBOC. Because at this point in time, we don't want to weaken the Chinese currency substantially because of the rate differential between the U.S. Benchmark interest rate and the Chinese interest rate is still quite large. Right? So if we ease without the Fed cutting the rates, then it will put pressure on our currencies. So I think in the second half of the year, I think once the Fed start to cut rates, then the room for further monetary easing is open.
And let's zoom in on the investment markets. What strategies should investors employ, especially in China, to adapt to the changes in interest rates this year?
Yeah, I think surprisingly, the long rates is still making new lows by historic standard. I think people who have been holding on to their longer-term Chinese Treasury bond has been doing quite well, and also at the same time, even though people are reaping good benefits, good returns from the Treasury market, the Chinese stocks are rebounding from the low it actually reached just before the Chinese Spring Festival. So I think if you look at the smaller cap names, they actually bounced more than 20% in a matter of less than months. So it's one of the strongest rebound we had in history. So I think people should, at the same time, holding on to their Treasury portfolio. At the same time, I think people should remain their risk exposure to the Chinese stocks, because these stocks are cheap, the economy is improving on the margin, and there's room for further monetary easing in the second half of the year.
And since we talked about the economy, we're seeing some positive signs in the first quarter. What is your evaluation of the overall economic trajectory, and do you believe that recent rate cuts have had trickled down the economy?
Yeah, I think industrial output has been far exceeding expectation. I think FAI, fixed income investment, is also above expectation, because investment in the manufacturing sector is holding up quite well. It's actually more than offsetting the downfall in the property sector. In my view, further money investing in the property sector is probably, trying to ensure new home building delivery, for former customers who has already placed down payment for those buildings. And the new investments should be going into more high value-added industries, right? So to build up on the economic strengths. So, as a result, we're seeing a picture of above expectation FAI, above expectation IP, and also consumption is well in line with expectation as well. So hopefully this momentum could continue into the second quarter and also in the second half of the year.
Well, thank you very much for your analysis. We really appreciate your time. That was Hong Hao, Chief Economist of Grow Investment Group in Hong Kong for us.